Hey there, Chuck Threshie here with Total Mortgage, here to talk today about non-conforming or non-QM loans. Basically, a non-conforming non-QM loan is a loan that does not meet the guidelines or the conforming guidelines of Fannie and Freddie. Each year, the FHFA, the Federal Housing Financial Authority, sets conforming guidelines or loan limits. This year, it's $766,550. If it's over that amount, it's non-conforming. But really what a non-conforming loan boils down to is alternative document non-QM loans. The alternative document guidelines that I wanted to talk about today have made up about 30% of my business in the last 12 months. In mortgage, we use qualifying income to obtain a mortgage for our borrowers, getting W-2s and pay stubs, or reporting your self-employment income on your own. With non-conforming loans, that income is generated with alternative documents or an actual home. So for example, a DSCR program stands for Debt Service Cover Ratio. If you want to buy a non-owner occupied investment property and your qualifying income, your income from your job, doesn't meet the guidelines to buy that property, we will use the income generated from that property. We simply use the income from the property. That's the qualifying income, and that's it. We'll take your credit score, but we won't use your liabilities and other things that go into a conforming loan. Other conforming loans that are very popular with me right now, asset qualifiers. So for a perfect example of that, a gentleman or a woman sells the business that they own and they're asset rich. So they've got 5 to 6, 7, 8 million, whatever it is, in the bank from the sale of that business, and now they don't have any income being generated from the business they sold, and they want to buy a home. I'm actually in the middle of that scenario right now. I submitted his bank statements, his ID, pulled his credit, and that was it. Within 24 hours, he was approved based on the qualifying income generated from those assets. For self-employed borrowers typically take a lot of deductions, right? And they either use business returns or Schedule C to report their self-employment income. Oftentimes, that is netted down to a number that won't allow them to qualify because they've taken a lot of expenses. So I take 12 to 24 months of bank statements, whether they're personal or business, and we use the deposits from their self-employment business going into those accounts to qualify them with income. So it's not the earned income, it's literally the receipts from the business that go into those bank statements for 12 to 24 months. We have bridge loans. We have foreign national loans that we have available to us here at Total Mortgage. I've never been involved or with a lender that has more and better non-QM products than here at Total Mortgage. Non-QM loans are very popular right now. They are very easy to qualify for, and I'm here and ready to get you pre-qualified whenever you need.